Okay, and we are live. If you can hear me, you can see my screen, type yay in the comments. We haven't had a Telegram live session for about a month due to events and due to manpower. Okay, so if you can hear me, you can see my screen, type yay in the comments. Then I know all is good, okay? Okay, Kit, Irene, great. Wow, so far Zen has a question already. Good, good. Okay, today we'll talk about the US market first, huh? And if we have a bit of time, we can talk about the Hong Kong market. All right. So as usual, this is a sharing session, not a buy or sell call. Okay. If that is clear, type clear in the comments. Okay, the Explorer, clear, good. What about the rest? PL cannot join the live stream. I think you should be able to. Irene, okay, great. Okay, good, Edwin. Okay, PL, maybe you try to exit and you come back in again. See if you're able to. Okay. How many of you, right, are surprised by this bull run in the US stock market? Type me in the comments. And by what I mean surprised by this bull run, right? Let me draw it out. Here, all the way. Here, this run up all the way. Okay, starting from somewhere in middle January or late January. Please, can you share about NVIDIA? Okay, later. PL, how to join live stream? Let me take a screenshot for you. PL, you exit the comments, you see the main chat, right? There should be a button called join live stream or live stream started. Click on that. Let me take a screenshot. Okay, I sent it out. PL, you take a look. Okay. Yeah. So Kit, Irene, I'm also a bit stunned by this bull run. I was thinking, hey, the bulls got so much strength. It can like sustain for so long. Okay, I'm also taken aback. And it has broken out of the upper trend line for close to 1.5 months. Yeah, close to 1.5 months. And it's still going. You see, this is the futures, right? And you see, still going. But all this while I've been saying, it is overheated, it is overextended. Be more careful, be more cautious. Yes, it's a bit crazy. Be more careful, be more cautious. Do you remember that? If you remember, type yes in the comments. Okay. It is not that I'm senile and I think that the market is going to drop. But it pays to be more cautious and more careful. Yeah, Kid, correct. I've been cautious for very long already. Correct. Right? I show you why. Let me draw it out for you. So as the market climbs, you notice the RSI not? Like, coming down all the way. So it is telling us that there's diminishing bullish momentum. And the funny thing is that with lesser and lesser bullish momentum, the price still can go up. So it's a sign that something is not quite right. So as informed traders and investors, we got to be extra careful. Does it mean that you do not buy anything at all? You can still buy, but buy in smaller quantities. Okay, that means let me write it down for you. Okay, you can still buy, okay, in smaller quantities. Okay, so for example, if you are able to buy 1,000 shares of whatever, okay, of ABC, instead of buying 1,000, maybe you enter 300. Okay, 300 of ABC shares. Now, if you can probably buy 500, okay, XYZ shares, can consider going in maybe only about 200 XYZ shares or even 100 XYZ. Clear? So right now, the market condition is still very overheated, overextended, and showing signs of divergence, okay? Showing signs of a pullback or correction. Clear so far? If this is clear, type OK in the comments. And plus, it's outside, it's above its uptrend line. Okay? By quite a huge distance. Okay? So away from uppermost uptrend line. Okay, Casey Neo is asking, could it be because of those who have missed out on the run up last year and they are trying to get in every time there is a small retracement? Possibly. Okay, possibly. Okay, so I'm going to erase everything, all the drawings. Now, I also see something, do you remember the STARS framework? Okay, STARS, S-T-A-R-S. Okay, this support and resistance. This is your trend line, your ATR indicator, RSI indicator, and sentiment. Now, do you remember what makes up sentiment? Okay, candles, right? Candles. Now, when you have big green candles, what does it tell you? Okay, big green candles equals to bullish sentiment, right? Or strong bullish sentiment. If you have small green candles, what does this tell you? Weak, okay? Weak bullish sentiment. All right. Now, let's again pay attention to this area, All right. At the start, you see many small green candles here. Then getting bigger. Okay. Then small again. Big, small, very mixed. But overall, pretty strong. Okay. Overall, pretty strong bullish momentum and sentiment. Then here, you also see some big ones. But after that, when you come to this here, you still see some big ones. After that, you come to here. Getting smaller. You see the size of this compared to the size previously? It's getting smaller. This one also. And today, as of now. So, can you tell that the bullish momentum is weakening? If you can, type W in the comments. Just based on this, can you tell that the bullish momentum, the bullish sentiment, it's getting a little weak? If you can, type W, okay? So coupled with the divergence that you see, coupled with the fact that the price of the S&P 500 futures, right, is way above its uptrend line. Things, the signs of a correction, right, of a pullback is getting obvious. Okay? If everything's good so far, type OK in the comments, so I know that you are following well. Okay. Can you all see my screen? Because I've written quite a lot of things on the screen and I haven't gotten a response from you guys. Don't scare me, leh. Clear so far? Clear so far, type OK in the comments. Okay, please. Okay, thanks. Yeah, because without any reaction or response from you guys, I don't know whether my screen is being shown or not. Can I? Okay, I'm going to remove everything now. Okay, knowing this, what should you be preparing for? A correction lah, right? A correction. Then how will it work? How will it turn out? It could probably be like that. Then a short up leg before coming down. Then maybe up even further. Okay, why? Because historically, April has been a very bullish month for the US stock market. Okay, April has been historically a very bullish month in the stock market, especially for the US. Okay, so this correction may last until probably late March or maybe even early April before prices start to rise. But whether or not the price of the S&P 500 futures, right, will supersede its high, will form a new high, that one we won't know lah. We won't know yet. And because we know that April is likely to be a very bullish month, right? Now, when we say bullish, it means that the opening price in April and at the start of April and the closing price at the end of April, right, is a positive. Okay, the difference is a positive number. It can also mean that like that go up in April, right? Go up just by like that in April. These are also called bullish, right? Because there's a positive price or value change, right? So we continue to pay attention to the chart. We try not to speculate on where the price will go yet until when it comes closer to the date. Okay, so far? If everything is okay, type good in the comments. Oh yes, I have this here. And it's with no, I mean, it's quite easy to tell, right? That the whole market is, I mean, the investors and traders are feeling extremely greedy in the US stock market right now, right? As what I've shared from the chart just now. Okay, very easy to tell lah. So try to avoid for now, or go in smaller quantities. And when you go in small quantities, make sure you have a stop loss also. Okay, because the stock market can just snap downwards like that at the snap of a finger. Now, if you notice, you see in December it came down like that, right? Without a stop loss, this drop is still okay. But what about this? Without a stop loss, you can drop down, as in your stock price could collapse by about 11%. And this is something that you may not want. Because if the overall US market drops by 11%, your stock could drop further. Your stock could drop more than 11%. Right? Yes, there will be some stocks that maybe drop 8%, 7%. You'll never know. So always have a stop loss to protect your trading capital and to help you secure whatever profits that you have. Okay, if this is clear so far, type stop loss in the comments. And the best part is, remember we have talked about stop loss, I think, in 2 or 3 videos back. Let me find it and I'll send you the link in the replay. Okay, in the recording. Can so far? So is this the end of the update? Of course not, okay? Of course not. I have a lot more to share with you. Now, in this overextended market, one sector has caught my attention. Okay? And this sector, everybody needs it. Everybody uses its products, its services, and the companies inside, most of them are household names. Okay? This sector is the energy sector. Okay, the energy sector. Let me put the weekly chart. So the energy sector has been pretty unglamorous, all right, lately. So after the rise, you see, after the COVID drop, the energy sector rose all the way and it went sideways. Yeah, I cannot remember when I shared with you. I think earlier this year, I shared with either you or in the webinar, either in Telegram or in webinar, that the energy sector could pull back to about $29 before bouncing up. And you can consider taking profit at about $92 US. And I think that it's going according to plan. Okay, this arrow was drawn back then. I didn't expect the timing to be so precise. Okay, this is pure luck. Okay, then you'll be asking, okay, now if the energy sector is performing, are there individual counters that you can be paying attention to? All right, of course, one of the counters, right, I shared with you guys quite a number of times, XOM. Okay, XOM. Can you type XOM in the comments? Great. Thank you, Tony. Okay, XOM. Why? Let me zoom out. You see XOM? After COVID, right, it also shot up all the way. And then it went sideways. And sometime earlier this year also, I shared that XOM could come down to about 99 or 100 US. Wait for the bounce up. You may want to enter there. All right, and yeah, there's an entry at about $100. Stop loss at about 94. Your take profit at about 118 US. And of course, energy, you don't expect it to fly so fast. So, okay, so give it some time. This should be a slow, steady, and high probability trade. High probability means that there's a high chance of this making you money. High chance that it should hit your take profit at about 118. Okay? Of course, you cannot compare this to your tech stocks, right? Tech stocks can jump $10, 10% in a couple of days. But this type of big energy companies take a bit more time. However, they are more predictable. Therefore, your chances of success or your chances of making money is higher. If this is clear so far, type OK in the comments. Right? So please do not compare this type of energy stocks to your tech stocks. No fight lah. But when it comes to losses, also no fight lah. Okay? So of course you lose. I mean, there's a good chance of losing a lot more in a tech with tech stocks. Can Okay, good. Now there are also a few sectors that are climbing. Okay, that not many people are paying attention to. Let me switch back to the daily chart. This, the material sector. Okay, I zoom out. Can you see also going a bit sideways, but it has recently broke out. Okay, so I'm going to draw support and resistance lines. Drawn live, you see. So same thing, I'm looking from the left here to the right. Okay, that's how we can draw it, draw the lines a bit more accurately. Okay, another one somewhere here. Okay, then what's the game plan? Okay, the game plan for this, okay, I zoom in. The game plan for this is, I think it could reach up here, maybe exit a bit before dropping. Okay, and see if it can go higher. This is the game plan. Okay, because now the market is so hot, right? People are entering. So even though the RSI level is pretty high at 74, we can reasonably expect the price of XLB to climb up a bit more. Okay, and all these buyers are likely to be the uninformed buyers. You let them buy, then the whole market should push it down, okay, to about 88. And if you can bounce off 88, yeah, you can think of an entry here. You can consider an entry somewhere here, about 88 plus or 89. Then ride it to $90, $91 or even slightly higher. Okay, then you'll be thinking, XLB is an ETF, but I don't want to buy ETF. I want to buy something that can produce a higher return. Right, very simple. What can you do? Go to ETF.com, okay, /XLB. All right. Now, once you are here, you can go to holdings. Okay. You can scroll down. You can see these are the top 10 holdings. If you want more, just click on view all. Yeah, then just type into trading view. You can look at the chart. Okay, so let's take a look at Ecolab. This one, Ecolab. Okay, ECL. So ECL has been flying. And as the market continues to soar, right, what can we really expect? Let me zoom out. There's one more here, one more somewhere here, and below it somewhere here. Okay. So this area of 228,229 is a resistance area. I think Ecolab could go a bit higher before coming down, then try to go up all the way. Alamak. Okay, this is quite ugly. Let me draw it again. Something like that. Okay, so now don't rush lah. Don't chong in. If you chong in, then you get wiped out. When the price gets wiped down, it'll be very hard pain. It'll be very painful. Okay, and then of course use your ATR indicator. Okay, apply your stop loss, and you can probably take your first profit at about 229, your second profit at about 236. Okay, so if this game plan is clear, type ECL in the comments, ECL, to help you remember that this is the counter that you want to be paying attention to. Great. Okay. Then, do you remember I've been emphasizing that now is not the time to buy for the long term. It is also not the time to buy and hold for maybe 1-2 years. Do you remember this? If you remember this, type me in the comments. Okay, Zen, thanks. Anyone else remembers besides Zen? James also, great. Why? Why is it not the time to buy and hold for 1-2 years or even longer? There must be a reason, right? If not, then whatever I say is pretty much useless or not actionable. Okay, the reason is the signs of a recession is flashing. Okay, so when a recession happens, there's a good chance that the market should drop. And when the market drops, it can drop as much as 50+%. as shown in 2008 and year 2000. Okay, so I'm going to show you the chart of SPX. Let's take a look at SPX because SPX has a longer price history. Okay, I'm going to hide the indicators because we don't need it now. We don't need them now. Here. Okay, so I'm going to measure the peak to the trough and I'm going to measure the time taken. So somewhere here, somewhere here. Okay, can you very quickly type in the comments how much did it drop by this figure? Okay, can you very quickly type it in the comments? For if it's too small, this. Okay, minus 57%, no joke, minus 57%, and 518 trading days, which means about 2 years. Okay, about 2 years. All right. So if you have gotten this, type OK. Then I'll show you what happened in year 2000. Okay, you have gotten this, type OK. Then I'll show you what happened in year 2000. Okay, I assume you're all okay, yeah? I'm going to move. Okay, so we are in... Oh. Okay, we have teleported back to the year 2000. Okay, so let me measure from the peak to the trough. Here, the drop was minus 50%. 931 days. This is trading days, which means about 2.5 or 3 years, close to 3 years. Okay, so if you are going to buy and hold now, okay, for 1 year, 2 years, 3 years, 4 years, I don't know when you'll be breaking even. Sad to say. Even if you get dividends, very hard to break even in probably the next few years. And not forgetting, there's inflation. So your purchasing power now will be higher than in the future. Okay, so with all this factored in, you may suffer a lost decade. You may suffer loss and opportunity cost for the next 4-5 years. And would you even want that to happen? I don't think you want this to happen to you, to yourself. Nobody in the right mind will probably want this to happen. So now that you are more informed, okay, remember, okay, burn it into your memory that now is not the time to buy for the mid-term or the long term. Okay, if this is very clear, type clear in the comments. Very clear. Make sure, because even up to today, I get phone calls asking, hey, Ben, is this a good time to invest in the US market? So my very next question to them is, are you looking at short term or long term? Then the answer to me, the response to me will be, Ben, I'm looking at the long term. Wah lama. Habis. Okay, so commit this to memory. All right. Good. Pris, does this apply to all the US stocks? Of course not. Why? Some US stocks, they perform better in recession or they perform better than others. Okay, they may drop like maybe 10 or 15% when the overall market drop by 50%. It's still outperformance, but would you want to suffer a loss of 10, 15, 20%? Okay, so look for stocks that are heading upwards rather than coming down, especially when the whole market is coming down together. All right, James is asking, So should we switch to lower valuation markets like Hong Kong and China? Okay, very good. I think Zen asked about Hong Kong markets. Let's touch on that later. Okay, James, you hold your question. When we switch to the Hong Kong market, I'll answer that. Okay, the Explorer. Should we liquidate everything and hold cash then? Actually, not necessary, right? Because if you do CFD, you can short the market and make money. So instead of sitting out, right, here, right, you see, this drop, right, 931 days, trading days, about 3 years, instead of sitting out for 3 whole years on cash, your cash value will drop. That means your $1 million will probably become only 900 million. Okay? That means instantly you already lose some money, and then you waste a lot of time. You lose time, 3 years, or 1.5 years, or 2 years, however long the recession or the bear market lasts. So you can always utilize CFD to short the market. Okay, short the market, and when the market really comes down, what happens? You make money. So while others are sitting on cash, not utilizing their money, while others are suffering losses, heavy losses, because they only buy, or they stay out completely. You, as an informed trader, you're making money, man. Okay? And when you are shorting, you can also use the STARS framework. Very useful. Okay, the Explorer, if everything's okay, let me know. Okay, I assume okay, the Explorer, whenever you are able to reply, you reply. Okay, now let's switch our attention to the overall US market again by looking at the yield curve. Okay, Explorer, thank you. Yield curve. Okay, how to interpret and read this chart? Very simple. The gray shaded areas, okay, period of recession. Okay, when the yield curve is above, that means it's above here in a positive territory. The stock market, the economy, is in a healthy state. When the yield curve is here in the negative territory, below zero, okay, below zero, it is weak, unhealthy. Okay, so knowing this, do you think the stock market is very strong now or very weak? Can you type in the comments? Economy very strong. Economy very weak. Stock market, signs of weakness. Okay, not weak yet, but signs of weakness. Okay, so it's a warning sign already. Warning sign. Then you see every time it goes back up, crosses back up to zero. A while later, recession, you see? Come down, crosses back up to zero, crosses back up to zero. A while later, recession. Here, crosses up. A while later, recession. This one is COVID. Okay, this is COVID. So now it's getting nearer and nearer to zero. This was the base. This was the base. This is the base. Getting higher and higher, near zero. So once it hits zero, a while more, we may fall into quite a big recession. Okay, and we can expect the stock market to drop quite a lot. Okay, so this is the yield curve. Why I'm bringing this up again is to help you revisit the things that we have shared before. Ming Han, myself, Jeremy, Jack, we have all shared about this, and we need to continue to pay attention to this. Okay, if this is very clear, type YC in the comments. YC to remind you of yield curve. YC. Okay, I will send the link in the comments right now. So you don't need to Google lah. Kit Kit asks, does the size of the dip magnify the recession to follow? Size of the dip. Oh, Kit, I'm going to draw on the chart, on the graph. Please let me know if my understanding is correct. So are you referring to this? Sorry, hang on. Kit, are you referring to this magnitude? This magnitude? Yes, this one I don't know. This one I really don't know. Okay. So I cannot give you any comments here. I cannot comment on this. I really don't know. Okay. So can I move on? If all is clear, I can move on. Type OK in the comments. Okay, we are going to look at another interesting data set. It is called the unemployment rate. Now, we have been sharing about the unemployment rate for some time also, since I think October, all the way until today. I hope you don't find us naggy. Okay, so what can you observe from the unemployment rate? Let me share this with you. Now, do you notice when it's uptick, then same thing, this recession. When there's an uptick, a recession happens soon after. Okay, you have R over here. Okay, this one not so much, but a sudden spike. This is a very sudden spike. Very difficult to foretell. R here. Now, can you see a bit already? Can you see this happening? If you can, type me. Okay, and back in October, I conducted a webinar. I specifically shared that we could see this happening, and it really happened. Okay, so maybe give it a while more. The US economy, the US stock market could come tumbling down. Okay, so things are not as rosy as it seems. Headlines can tell you, wow, the market is robust. But then again, you hear about layoffs. The market can tell you about presidential elections, right? The market tend to be bullish leading up to the presidential elections. But then again, when you look at the stats, the data, it leaves us wondering if the bullish case is really, really strong. All right. Okay, so with this, let us take a look at the Hong Kong market. Because Zen and Zen and someone else asked about Hong Kong market. James. Okay, I'm going to remove everything. Let's look at the Hong Kong market. I don't need the volume. Okay, let me use the weekly chart first. Okay, very quickly, can you tell me if the Hong Kong market is in an uptrend or downtrend? Okay, if you think it's downtrend, right? Okay, downtrend. And since when? When did it start? Okay, it started sometime in 2018 until today. Until today. All right. Now, when things are falling, there's bullish or bearish momentum. When the price is falling, do you have bullish or bearish momentum? Can you type it in the comments? Okay, when the price is falling, you have bearish momentum. Okay, the bears are stronger. Okay, means what? Means the bears are stronger. Bears got more muscle. Which also means what? There's bearish momentum, right? And momentum is likely to continue. Okay. What is moving tends to remain moving until and unless there's an opposing force or stronger force acting against it. Right? This is the law of physics. Okay, so this also applies to the stock market. Is there a big catalyst to reverse this trend? I don't know. I don't see any yet. All right. I'm going to remove the writings. Now, when then this part, right? This was when China announced that it's reopening from COVID. Okay, maybe no more. No, I think no more lockdown. Right? They scrapped lockdown. Okay, reopening. Wow, the market soared. A lot of people also called in and emailed in. Say, hey, Ben, Ming Han, Jack, time to invest or not? So guess what? Our next question was, short term or long term? And their response, long term lah, Ben. China reopening right? Things are changing. Things are improving. Then I say, alright, how sure are you? Because the charts aren't telling me that. Alright. Now, let me draw some the angle should be somewhat like that. Yeah, just draw trend lines first. Support, resistance later. If you want to draw one more, also can, but I think, yeah, okay, we can draw one more. So what is falling tends to continue falling. Right, you see here, shoot up. After that, lost all its bullish energy, all its bullish momentum, slid back all the way down. Okay, wow, very near the low of COVID. Very, very near. Okay, so what is the conclusion? Things are cheap for a reason. Right? For example, you go to MBS tonight, you walk into the LV island. You look at the bag. Wow, this LV bag costs 6,000 Sing dollars. You go to Chatuchak, you see the LV bag. 60 Sing dollars only. Walao, can compare or cannot compare lah. Right? The bag in Chatuchak is cheap for a reason. I don't know why lah, but it's cheap for a reason. Okay, if you bring it to the LV retailer in Singapore, they may not even entertain you. Right? You say, hey, my bag can help me clean or not? Huh? They look at you, clean. You know lah, you know why? Okay, so things are cheap for a reason. Things are undervalued for a reason. And this may not be a value play. Instead, this could possibly be a value trap. Okay, value trap. If you are clear so far, can you type the word trap in the comments? Value play means the things must be good lah. Then it is on sale. Legit good. Okay. Like Black Friday or 11.11. That one legit lah. Okay, but this one, allow every day or every few weeks drop and drop. It's more of a value trap lah. Okay, and I remember someone asked about Nvidia. So if we are all done, if everything is done on Hong Kong, can you type HK? To tell me that I can move on. Okay. Okay, James, good. The rest? Can I move on? Yes, okay, perfect. Let me remove Nvidia. Okay, this is a weekly chart. Let me see. Weekly chart, what can you tell? When I see this chart, I cannot stop laughing. Why? Because I see something that a lot of people don't see, and they tell me, hey, I want to buy. You see the angle of a cent? Okay? And then you compare the angle of a cent now. Then in the last few weeks. Yeah, helicopter, 90 degrees up. Correct. So can buy or not? You let me know. Can lah, everything can buy lah, whether you make money or not. Whether the probability of making money is high or not. Another story lah. Okay? Don't believe, I switch to the daily chart, okay? I'm going to remove all the drawings. I switch to the daily chart. Newton's law, exactly. James, exactly. I nearly wanted to call you Isaac. No. James, thank you. Okay, so for Nvidia, there were multiple divergences that I saw and I highlighted. Okay, the first one or the one I highlighted was here. Then you see after that, it stagnated for a while before it dropped. And this drop is not small. It may look small on the chart, but it's not small. Let me measure that. From the peak to the trough, 11%. 11%. Okay? Then a lot more divergences if you pay close attention. Okay? So let me zoom in. Let's see. Is there one here? Can you tell me? Is there one here? Okay, so what's likely to happen? Remember the STARS framework? Just now we talked about it, right? STARS. The last S, sentiment, right? We talked about the size of candles and color, right? So now, what is the predominant color? Can we all agree that the predominant color is still green? That means there's bullish momentum. Okay, if you agree, type G for green. Okay, then let's talk about the size. Here. The size of the green candles, are they big or small? Okay, mixture lah. Mixture. Here, reasonable. Here also reasonable. But here, this area, big or small? Small, right? And getting smaller. Getting smaller. So what can you infer from this? Here you see, here, the green candle also getting small, all very small. Very, very small. After that, what happened? The price went sideways. Then, came down. Okay, so what can you infer? The price may not drop for the next few days or next few weeks. Doesn't matter. But you stand by already. You need to know that, if you are looking to buy NVIDIA now, I think it's too late. Okay? Then does it mean that you sell now? Like what Priscilla is, sorry, not Priscilla, what Pris is asking. You decide lah. Okay, I've really shown you the case, right? I've shown you there's a divergence. The green candles are getting smaller. You decide how much you want to sell now. Okay, you may want to sell in batches. Okay, you may want to shift your stop loss higher. You may even want to sell whole, right? Sell all your holdings. You may even want to just trail your stop loss. Okay, this one is manual shifting higher. Okay, this one is trading by maybe few dollars or few percent. Okay, so there are a few ways that you can take defensive action if you have the shares of NVIDIA. Okay, it's not like black and white where you must sell means you sell everything. Yeah, you can sell in batches, all right? Maybe 30%, 30% now. Then if it drops by 5%, if it drops by 5%, you sell another. You have 70% left, right? You sell the next 50%. And then you hold on to the last 20%. Hold and see what happens. If you hit your stop loss, then hit your stop loss. But if never, right, it continues to climb, good for you. Okay, if you are clear on this strategy, type NVDA. Okay, type NVDA. The strategy, this plan. If you already have NVIDIA, you are clear on this, type NVDA. Okay, so you want to sell now, can. You want to sell in batches, no problem. You want to shift your stop loss higher, let your stop loss work for you, great. Takes a lot more emotions out of the game, out of your investment. Okay, Ken? Did you enjoy this session so far? If you did, type enjoy in the comments. Okay, thank you, James, the Explorer, Priest, Tony, Irene, Kit. Okay, thank you so much for your support. Thank you so much for turning up. And I have some news to break to you. Okay, I'm Ben. I'm from Phillip Securities, and I'll be leaving the company soon. So this could be my last Telegram live session with you guys. But not to worry, we have Ming Han, okay, to take over. He is also an experienced trader, as you can tell. He has been sharing with you CFD strategies, Forex strategies, and a bit on, and quite a lot, number of Singapore stock market analysis and strategies. Okay, he's the one who coded and came up with the price to book value indicator. He has also created numerous other indicators from his own experience. All right, so Ming Han is a super experienced trader. He is the one who got me into the investment market, into the stock market, and I'm eternally grateful for this opportunity to launch this project, this Telegram channel, this Telegram live session, to host webinars, to even meet you face to face in our events, and especially our Chinese New Year dinner. Right? I saw a few of you like Paul, Chu Ying, Eric, I believe. Yeah, and a few others. So where am I going next? I'm going to do my own things, okay? Yeah, so thank you so much. I appreciate all the support, all the responses, right? And all you guys for being such fabulous audience. Okay, so with this, I shall end my Telegram live session here. Next week or the week after, wait, let me think. I think the week after, I have a webinar. That will also be my last webinar with Philip and for Philip. Join me, all right? Promise that you'll join me. We'll be discovering how you can enjoy investment or trading success consistently. Can? Don't miss me lah. Don't miss me. Ming Han will do a fantastic job also. Okay, Tony, do I have the link to that webinar? Let me go find out from my marketing ladies. Yeah, of course I will share in our Telegram group channel also. Okay, so that you guys can register and join me for one last webinar. Okay, thank you so much for being such great people. James, Pris, Kit, Tony, Casey, Irene, Zen, and K, Edwin. All right, thank you so much, guys. Thank you for spending your time with me. Take care. All the best. Enjoy your weekend. Bye-bye. Zen, miss your McDonald's. Ken, pay attention to McDonald's, okay? Pay attention to McDonald's. Okay? Take care. Thank you so much. Signing out. Bye-bye.